All right. Good morning, good morning. Good to see y'all. All right, let's get jumping in. We got a good 25 minutes. So hope everybody's having a good week here so far, though we're only a day in. But pretty much here, my friends, right? When it comes to trading this squeeze, you got two stages of this squeeze. You have the buildup of energy phase, and then ultimately you get the release of the energy phase. So Google, my old buddy Google here, here's a good example of the two stages. In the buildup of energy stage, it's the chop. It's that noise, it's that meaningless, frustrating price action, but it's a buildup of energy. +1, -1 ATR, a little bit of back and forth. That's stage one. And then everybody's favorite stage two is once that energy gets released, the squeeze fires and the stock moves a good 2 to 3 plus ATRs to the upside. So that's the fun part. But where we are right now as far as the indexes go, we're stuck in phase one. We're stuck in the buildup of energy phase, which you got to be careful what you complain about is a trader. It can be boring and frustrating to sit through the chop and wait for the move to unfold, but I mean, it's still a pretty good living. Put it into a healthy perspective. So, I'm still at the same thought process here. Across the board, weekly charts, daily charts, we have bullish structures. So I'm thinking once we get to phase two with the squeeze here, the release of energy, we're still looking for moves into new all-time highs. So I take that approach and that mindset to the S&P 500. I'm looking at the Qs here from the same perspective, buildup of energy with a bullish structure. There's a pretty high probability this energy gets released towards the upside. So get y'all up to date here on a few open positions. And so Caterpillar is another good example. The buildup of energy phase, you can't let that frustrate you. And more importantly, you can't let that shake you out of your positions. If you're going to go about trying to trade the squeeze for a living, you got to get comfortable sitting through the +1, -1 crap. Because ultimately, as the squeeze fires, that's where you're looking to get paid on the push into +2 to +3. So Caterpillar, we're taking our entry in the options room, I think over here, 19th to the 20th. 1, 2, 3, 4, 5, 6, 7 days of back and forth here, but it's squeezing like a squeeze should squeeze. So I still think Caterpillar looking good here for a move into about 248 or so. And you can look at the rest of the industrial stocks. They still have the same structure. So, it makes a little bit of sense here that Caterpillar's going sideways, Google's going sideways, UMP is going sideways, Triple M is going sideways. A lot of these setups you've been focusing on. Microsoft is going sideways. It makes a little bit of sense when you take into consideration what are the indexes doing. The indexes, they're just going sideways here. So if you're long a Caterpillar, long a Google, you can't be getting frustrated here in the back and forth. It'd be a different story if here goes the market, it's firing its squeeze, we're ripping towards 4,300, and Caterpillar still going sideways, and Google still going sideways. At that point, it's a problem. But with the structure of the squeezes here in the indexes, as the indexes are just building up energy trading sideways, it's okay if the stocks you're trading are doing the same thing. It makes a little bit of sense. So for the trading Caterpillar, for those of you in the options room, we got the two different put credit spreads. We got orders working to buy those puppies back at 70-75% of max profit, and there's not much to do there. Sit through the chop. For the position here on Google, bunch of sideways action, but it's holding structure, and you're looking for a move here into brand new all-time highs. So we got orders working on Google. My major focus right now, it begins and ends with the fact that you got squeezes here for the indexes. So, to answer a few questions I got on Twitter, a few folks are asking, why aren't you taking a position in the Qs? If you like Microsoft, why aren't you jumping into a position in Microsoft? And I'm looking for a little bit more exposure here, but the major thing to keep in mind is, in plain English, we're looking at the same setup across the board. Whether you're looking at a sector, whether you're looking at the individual stocks, the indexes, everything begins and ends with the fact that the S&P 500 and the Qs are in a daily squeeze. So keep this in mind, because as you're looking at those individual stocks, it all comes down to whether or not the squeezes here for the SPY and the Qs, can they fire to the upside? So if these squeezes can fire to the upside, that's going to be the overwhelming driving force. You're going to most likely see upside in Caterpillar and Google and Microsoft, stocks across the board here. If the squeeze here just goes sideways, as we've been doing, Google's going sideways, Microsoft, Caterpillar. So, I don't think right now you need to overwhelm yourself with 4, 5, 6 different positions. At the end of the day, you can be looking at a tech stock, an energy stock, a financial stock. Most likely, and we're just trying to think in terms of probabilities, most likely the success of your trade is going to come down to whether or not the indexes fire their squeeze. So from that perspective, Google is very much the same setup here as Microsoft. Microsoft is very much the same setup as Caterpillar, as is UMP, as is Triple M. They're daily squeezes in individual stocks with a squeeze in the index behind them. So from my perspective, I'm looking for one move here. I'm looking for a move driven by the indexes. The success of a trade on a Microsoft, a Google, etc., that's going to be the driving force here. Do the squeezes for the indexes fire to the upside? So I think what you want to do right now, you get 1 to 2 to maybe 3 good-looking charts. It could be a Microsoft. It could just be the Qs. It could be Caterpillar. You plant your seed in just a couple of good-looking setups, and then it's time for us to sit on our hands here and see if the indexes can get the job done. So, thinking in terms of we're looking for a market-wide move. This isn't about Microsoft right now. This is about the indexes. So from my perspective, I'm trying to keep things simple. So you could look at a Microsoft, and if you've got some Microsoft right now, I think you're in a great place. At the end of the day, Microsoft is going to move where the indexes go. So you got the timing here, squeezing the Qs, squeezing the SPY, and Microsoft has the squeeze. This trade probably works out really well if the indexes can get it going. It's all about the indexes here. So I think if you've got some Microsoft, you got a good looking chart right here. What I'm also considering though, is if we're looking for a move just driven by the indexes, well, what about a trade on the index itself? So you could look at something like this on QQQ. You could look at something like this on the NDX. Here's what I'm thinking. With the NDX, if we go to, drum roll, I'd like to give my swings a good 20 to 30 days to expiration. So let's look at June 25th expiration. For those of y'all who are familiar with my strategy, this is nothing new, but here's the thought process. Begins and ends at the structure of the chart. I'm looking for that high probability moment in time where we're building up energy, getting ready for a meaningful move. So the chart structure here is what I'm looking for. Daily squeeze, the histogram has gone positive. You have stacked EMAs. My mindset based on the structure here, there's a really high probability this makes a move into, call it 14,000. So I want to take that high probability setup, but then I want to smack it with a high probability strategy. So if I'm confident, based on the structure here, that we're going to make a move into 14,000, you know what I'm way more confident of? I'm way more confident we're not going to be trading under, call it 13,400 come expiration. I'm really confident 2 to 3 weeks from now, we can make a move into new highs. So I'm even more confident 2 to 3 weeks from now, we're not trading under, call it 13,400. So what I'd be looking to do here would be, June 25th expiration. And y'all know I love my put credit spreads. And then it's a matter of, how far out the money can I go while still getting a 2 to 1, 3 to 1 risk reward ratio. It's kind of the neighborhood I like to land in. So if we look at sell the 13,400 put, buy the 13,350 as protection. And mind you, you can do this on the QQQ if you got a smaller account, but we'll look at this on a one contract basis. And that's kind of your 3 to 1, right? So I probably wouldn't go any further out the money than that. For those of you who are newer to options, this isn't the sexiest approach. For a lot of new options traders, the attraction is I'm going to buy a call for $1 and sell it at $5. And if you can make that work with consistency, then God bless you. What I found is, I don't need to hit a home run on every trade. What I need to do is every month hit my monthly goal. And what I found is the combination of a high probability setup, like a daily squeeze, and then you throw on a high probability trade like a put credit spread, you're not hitting home runs. I'm never going to turn $1,000 into $10,000. But what I'm going to do is consistently find those moments in time and get my piece of the action. So something like that is pretty attractive. And mind you, I know this isn't so much trade advice. I'm just kind of talking out loud here, running through a few things. But understand, doing that put credit spread here on the NDX or the QQQ, it is basically the same exact trade as doing a put credit spread on Microsoft. Qs go higher, Microsoft probably goes higher. Microsoft goes lower, guess what? It's probably because the Qs went lower. Individual stocks, sectors, indexes, but when it comes to this moment in time where everything is squeezing, you're looking for pretty much the same move. So hopefully that makes sense, y'all. Update you on a few more things here, and then we'll get into some Q&A. But in here, choppy stuff. So for the last, I think, 3 weeks here, we've been doing some iron condors, and they've been going pretty well. So nothing sexy, nothing exciting, but my perspective is I got that monthly goal, and if we're going to chop ourselves into oblivion here, let me sell a couple of condors, let me, get my little 1-2% return, and that's just a contribution towards the monthly goal. So for the NDX here, here's the one we took in the options room together, and I did cheat on y'all, I'm sorry. I put one on for Friday without you. But for today's expiration, we put this on Friday. So I'm not sure if we discussed this in our morning stream, but with the condors, you had the long weekend. Market was closed Saturday and Sunday, as always, so you get the weekend premium decay, but with the market being closed on Monday, you get an extra free day of premium decay. So on the condor here, we sold puts at 13,510, which it's about 1% below the closing price from yesterday. So yeah, it's a little bit of wiggle room. And then the calls here that we sold, that's a thing of beauty. Those things are just dead. Sold the 14,000s. So those are dead. And that's about 2.5% above yesterday's price. So we're in really good shape here on the call side. What could get sketchy, it's not out of question for the market to roll over 1% in a day. So, my mindset is here, keep an order working to buy this back at 70-75% of max profit, take the little paycheck, and then get the heck out of the way. But that's my spiel, and I'm sticking to it. You got the squeezes, just understand it can be Caterpillar, Pepsi, Google, Netflix, Costco. Everything is most likely going to be driven by what the indexes do from here. So you find a couple of good positions, and then it's just a matter of, what's your approach? Do you like to buy calls? Well, then, hey, buy the best looking calls you can. Do you like to sell put credit spreads? Well, then, hey, maybe doing a credit spread on the NDX gives you a little bit more cushion and a better risk reward than, say, doing a put credit spread on Microsoft. Same setup. It's going to be the same move. It's just a matter of how do you want to go about catching that move. So never a dull moment, though the chop here has been pretty dull. But let me look in the chat here, get caught up on a few questions. Love a good spiel. Yeah, Russ, you're right. You got the beige book this morning. So with any luck, for those of us long right now, hopefully the majority of us, with any luck, we just got to get something waking up here. That's it. So I love these discussions about what should we expect from a squeeze? Because for so many years I would jump into a squeeze, right? Like a Google. I know I keep going back to this one, but for years I would jump into a squeeze like Google, right? And I'm getting shaken out on that move. And a few days later I'm trying to come back in and I'm getting shaken out on that move. It's just noise. Like your job of trying to become a consistent trader is going to be so freaking tough if you're getting shaken out in that shit. Like it's just the reality. That's what the squeeze indicator is designed to find. That moment in time where we're doing nothing to the extent we're building up some big time energy. So, you got to have that comfort. You find the good looking squeeze, you take your position, but then give it time to do its thing. So Caterpillar here, believe me, I love taking an entry and the next day, we're just making a move higher. Kind of like that GameStop trade. More often than not, though, You're waiting for the buildup of energy. And think of the trade-off here. The trade-off is, if you're going to take your position inside the squeeze, you're going to have to sit through that back and forth. The benefit of getting a little bit early, so to say, the benefit of sitting through that crap is that once the squeeze fires in your direction, you're golden. You're already in a position here, day one into the move, even thinking about going, you're already in the green. Then you're taking your profits into the strength, while all the bozos come in here and chase it at +2 to +3 ATR. That's the trade-off. Can you be patient enough to sit through the back and forth chop? And if you can, you got a smooth ride once things unfold. You could instead, you can sit here and wait to take your entry once the breakout happens, once the squeeze fires. Here's my issue with that. A lot of times when the squeeze indicator technically is firing long, you've already made a move to +2 ATR. You're getting long when it feels safe, but when in reality, the move from the 21 to that +2 ATR extension, that's the high probability move. And if you're waiting for that breakout, you're basically buying, right towards, call it that potential top. So a few things to take into consideration. Andrew, taking a look at Yum. Let's see what's here. Ooh, I like it. Andrew, I like it. Right, one setup, but such a powerful setup. We've seen John do it. We've seen Henry do it. I've been able to do it. A lot of other traders have been able to do it. You can build an entire trading career around looking for setups like this. And it's not a matter of, every time it works in your favor, but it's more so a matter of you trade that kind of setup over and over and over and over again. You do 500 trades with that kind of structure. At the end of the 500, I'm a firm believer you're coming out on top if you're using proper position sizing. Eric, Tesla. Tesla's a toughie right here, Eric. It just looks sketchy. My whole thought process is if I look at a chart and it takes me more than 3 or 4 seconds to decide, what am I going to do here, there's something wrong. So, Tesla over here, okay, daily squeeze, positive histogram, we're above the 21, we had stacked DMAs, that's a no-brainer. I'm going to sell my put credit spread, and the move I'm looking for. When we have a daily squeeze and we're under the 21 with a negative histogram, no stacked DMAs, that's when we did the call credit spread, looking for a move into -2, -3. It's messy right now. I want to short it because you have negatively stacked moving averages. You got red 10x bars. But, here's the issue of potentially trying to short something right now. There's the overwhelming driving force. Daily squeeze in the indexes. Sure, we could rally to new highs and Tesla rolls over. But in terms of, is that a high probability trade? Trying to short a decently weighted stock in the face of a long squeeze? Probably not. So Tesla for me right now is just a kind of leave it alone stock. And we'll come take a look, closer towards the end of the month. Tesla's been tough this year, though. She's been tough. Kevin, for Google, I'm biased here because I have a position. It's just not the ideal spot to get long. So Kevin, I don't know if you've got a position. If you've got a position, my mindset is I'm looking for the move into at least +2 ATR. And it's like, hey, if we're going to go +2, well, we might as well go up there and give that all-time high a smooch. So if you've got a position in Google, I think you hold on for that move into the highs. If you don't have a position, the best entries are always going to be as close to the 21 as possible. Here's the mindset. When we're trading the squeeze, or really if we're just trading something in general, and we're looking to go long, what's the high probability move? The high probability move is a move from the 21 into about 2 to 3+ ATR. So from that perspective, I'm looking at Google here. It's not crazy upside. It's not quote unquote extended. But an entry back here is just so much better. Look at all the upside you can potentially have getting that entry versus getting this entry. So, you could go long Google here, but you can only go long Google, at least I think, if you're comfortable holding on through a dip to the 21. And really, I think if you get long here and it does dip to the 21, you probably want to take some consideration to add into your position. But once the stock has moved away from the 21, that should be a rule that every trader follows. I'm only going to get long here if I can make a promise to myself I'm not going to get shaken out if we dip to the 21 first. So, Google it's not extended, but not an ideal entry. Facebook is right there at +2, so I think you got to wait for a dip with Facebook. Kevin, if you're looking for a move in technology, this is what's going to drive it. The daily squeeze for the Qs. And the Qs are right near the 21. There's some nice potential upside. So, if I was going to get long Google or QQQ right now, I'm getting long QQQ just because it's there at that buy zone. JR, you've been picking up since last week. I like it. All right, Kevin, yeah, you're in good shape. You're in good shape. I'm right there with you. Jason, how's Yeti looking? I think, is Yeti still in the same squeeze? Yeah, it is in the same squeeze. Jason, this fits everything on my checklist. You got a good looking uptrend here. Got the daily squeeze. It's at the buy zone. Histogram's positive, positively stacked moving averages. You trade a setup that looks like that 500 times in a row, I think you're making money. We'll do a few more here, gang. Mr. Blue Chip, Amazon. I got a bone to pick with Amazon. I love the weekly squeeze. Now, here's one issue with the weekly squeeze. It's been weekly squeezing for almost a year, right? Basically since August of last year, which it's kind of like, what's the freaking holdup here, right? Think of how directional the market has been over the last 10 to 12 months. Amazon just can't get it going out of this weekly squeeze, but structurally, it's really bullish. Stacked EMAs, green 10x bars. So I like the weekly. But here's my gripe with Amazon. Amazon's one of the most heavily weighted tech stocks. Amazon should be moving hand in hand with the QQQ. So let's compare the two here. Now keep in mind, if the Qs make a move to new highs, I'll be shocked if Amazon doesn't make a move higher. But bringing it back to the big P word, probabilities, look at the Qs have done here. We're getting flushed, but a total recovery. Back above the 21, brand new daily squeeze, histogram goes positive, we're holding support, and you have positively stacked moving averages. In plain English, it took a little bit of a whopping, but it got back on its own 2 feet in a really nice fashion. So as the QQQ regains its structure, what do we want to see from the tech stocks? We want to see something like a Google. Google, it's getting a little bit sketchy, but gets back on its own 2 feet. Brand new daily squeeze, histogram goes positive, stacked EMAs. It's moving with the Qs. Facebook barely budged here. But then with Apple and Amazon, Apple can't even get back above the 21. Apple's one of the most heavily weighted stocks in the entire market. And as the market is looking really bullish here, what's Apple's issue? Can't get above the 21, no positively stacked EMAs. That's not my high probability setup. And then my pal Amazon here, and y'all know I love trading Amazon. Amazon's my most profitable name so far this year. But my old friend can't even get above the 21. So yeah, Amazon, Apple, they're gonna most likely make a nice move higher should the Qs get the job done here. But if I'm looking for upside in technology stocks, even though I understand they're going to move as a unit, I'm only going to plant my seed in the best looking setups. So Google, to me, that was a no-brainer. We got a squeeze, we got stacked EMAs. If the Qs make a good move here, well, all on its own, Google's the kind of structure I think points towards a really good chance of a move higher. Then take into consideration it could have the wind of the overall market at its back. That's a no-brainer. But I look at Apple, I look at Amazon, and they're not falling apart. They're not getting crushed. They're just a little lame, I would think. So, they make a move higher if the Qs do, but not my favorite daily charts right now. But listen, everyone, good discussions this morning. Hope I gave you a few things to take into consideration. But a quick recap here. We're stuck in the buildup of energy phase. So the last thing I'll say, we talked about this in the options room yesterday. The one thing you got to promise me you don't do here is do not get your butt handed to you. Don't force the issue. Don't cut yourself to death inside the buildup of energy phase. The Monday through Friday trades, looking for Amazon to go higher in a couple of days, Google, etc. That can be tough when all we're doing here is chopping. But if you keep taking, these little hits, those little hits add up. Unfortunately, you lose your shirt inside the buildup of energy. You might not be in the position that you need to be in to take advantage of the move once the squeeze fires. So, you plant your seed in the good-looking setup, and you do nothing here pretty much. It's not the funnest thing in the world, but put it this way. There's definitely worse things we could do with our time than wait for potentially nice, profitable moves to unfold. So stay focused, stay patient, stay disciplined, and I appreciate your time this morning. So options room, homies and homettes, I'll see y'all in about an hour, and I think we got today's Wednesday, so we should have a weekly recap video coming out to y'all tonight. So we appreciate you. Talk to you soon. Wish you the best of luck.